let's talk about investing during this ridiculous time right now, during this recession. We really, looking at the International Monetary Fund, looking at their data this afternoon, we are in for a world of hurt. So the output, let me just pull up some of the numbers from the International Monetary Fund today and what they had to say, because it's bad news. It's bad. I mean, their bottom line was, this is bad. And they crunched the numbers, the IMF did. And let me just give you some numbers here before we go into the investing portion of the show. And then again, I'll open it up for questions and answers here a little bit later in our show, so we can answer any questions you have about investing during this time, whether it's in the stock market, real estate, which is what I do, gold and silver, and other things, crypto, etc. But here's what the IMF had to say today. They said, they're calling it the Great Lockdown. They're saying global output per person will contract 4.2% this year. That's enormous. That's enormous. It shrank less than half that much during the 2008-2009 financial crisis. So double what we saw last time. They say their baseline scenario right now for economic growth is negative 3% this year, negative 3%. It's the worst case scenario. They're saying in the worst case scenario, lockdowns extending into the second half of this year, and then a second wave of infections next year. Now that's the big problem here. That's the fear, is that we go into what's known as the dance. I spoke to Neil Bawa yesterday, who's a great investor, and he's become a great guest of our show. And one of the things he had to say is, we're going to go into this dance phase where we're going to open up after the quarantine, and then we're going to start to have certain pockets will show up with the virus again. And we're going to have to do this dance where certain municipalities will have to sort of deal with it at a local level, but maybe not necessarily close everything down again. Like, we probably will not go through a national close down, national state of emergency. Wyoming was the last state over the weekend to declare a state of emergency. That's the first time in U.S. history that all 50 states have declared states of emergency. So Wyoming was the last state to fall on Saturday. So cumulative GDP loss over this period as well, over 2020 and 2021, is going to be about $9 trillion. That's more than the economies of Japan and Germany combined. So this is massive. And it's not just the size of these comparisons to the 1929 Great Depression, but namely all over the world, for the first time since the Great Depression, both advanced economies and emerging market and developing economies are in a recession. So we are here, folks. We are in a recession. So now, we knew this was coming. We knew this was going to be part of it. Now, as for real estate investors, as for people buying performing assets, how will this affect you? And I see many of you writing in tonight saying, look, I'm just buying my second house today. Someone saying, what are your thoughts on buying a fourplex in Las Vegas? No, not right now. So when I was speaking with Neil Bawa yesterday, again, a great mind in this in investing. He was on the show. That show will be published tonight, so you can watch that full episode on our YouTube channel. One of the things we talked about was, you still want to look at the 5 areas of investing before you make an investment decision, right? You still want to look at low unemployment, low crime, low vacancy rates, okay? You want to look at a diversity of jobs in that market. So you're not just investing in an oil market where it's just oil companies, and then we see this oil crisis, and then suddenly all of your tenants are out of work, okay? We don't want to do that. And you also want to invest in areas with strong return on investment. I would even take it a step further and say you want to invest in landlord-friendly states, places that historically you're able to get an eviction quickly if you need to. The laws are not draconian. I heard from one of our viewers that said it's been almost a year in California that they've been trying to get this tenant out of their property who's not been paying. They've been going through the eviction, the tenant has been playing games, and it's been nearly a year. Can you imagine you own a rental property and someone just squatting in your house for a year and you can't do anything about it? That's what it's like, folks, to be investing in blue states right now. So, I would look at these things seriously. You still want to look at the core metrics of investing. Low unemployment, low crime, low vacancy rates, Look, we have an incredible demand in this country for single-family housing and smaller multifamily housing, duplexes, which we love to build at my company. So there's an incredible demand. If you are in a market where there's high vacancy rates, something's not right. Something doesn't smell right, doesn't it? I mean, we don't have enough houses in the United States. That's why people from all over the world invest with us, because there's such a demand and the returns on investment are so good. So if there's such a demand, why is that particular market or that particular city have a higher vacancy rate? I wouldn't be investing there. Something's off if we have such a high demand for housing, right? So don't invest in those areas. Make sure that you're getting a strong return on your investment, a high ROI, okay? So like on the houses we do, between 7 to 10% net return on investment on a new construction property. And then if you roll in all the tax benefits and things like that. So you want to be looking at those things. I had someone message me the other day saying they sent me the details of a house they were going to buy or they were thinking about buying in Miami, which that's a huge problem. Number one, Miami, given the fact that all the tourism there has been slammed right now because of the virus, the overinflated prices. And so they were paying way more than they should have for a property. And they were actually going to be getting a negative return on investment on this particular property. I don't know where people are doing their numbers. Remember to take out that 40%. When you're looking at your annual income from a property, remember to multiply it times 0.6 so that you're removing that 40% for vacancy, repairs, expenses. Okay? And then and only then you're also covering your mortgage payment. If you're cash flowing above what you're paying on a mortgage and covering your basis on expenses, then you should be good. You should be cash flowing at least $100 above that point. And if you take out and make sure that 40% cushion is taken care of, then you're golden. But there are some other things now that we need to consider, and this is something that Neil and I talked about yesterday when we were chatting. Is you've got to consider the coronavirus piece of all of this investing. So, yes, these other areas you got to make sure for recession proofing, right? Low unemployment, low crime, low vacancy, expanding job market, strong return on investment, landlord friendly, but also corona proof. And what do I mean by that? Well, you talked about Las Vegas. Someone just asked about Las Vegas. That's a tourist spot. The whole city is shut down. All the casinos are closed. We just saw what was the one casino just sold. They just sold off to somebody. It was the famous old one. I can't think of it off the top of my head. Anyway, no. Absolutely not. If your entire economy is relying on the casino and tourism industry in Las Vegas, this can happen again, folks. I'm amazed. I don't know how many of you have seen the movie Contagion with Kate Winslet. Who else is in it? Matt Damon, Jude Law. It's like one of the top movies right now, and it's like 3 years old, I think. You watch it on iTunes or whatever. And so we rented it the other night because we're crazy. I don't know why we decided to rent this movie the other night. Freaking crazy. But we did. And, it's so amazing how spot on that movie was. It hit precisely what we're going through right now. And my wife and I said, when you're watching this movie, it almost looks like science fiction, right? You could be watching this thing thinking, this could never happen. This seems like it's, this is some ridiculous novel that somebody wrote. They turned it into a movie. And now we're living through it. I mean, it's spot on. So this could happen again. So do you want to be investing in a Las Vegas or a Miami, tourist areas that are completely shut down and reliant on that business? Look at Orlando. Orlando is about to furlough, I think on the 19th, 43,000 workers at Disney World. So they're going to be out of work, furloughed from Disney World. I mean, even during hurricanes, Disney World doesn't close. When I lived there, they closed one day after a hurricane, and then they were back up and running the next day. They're completely shut down all over the world. So don't make the mistake of investing in these spots right now. And I know obviously we saw what happened investing in Airbnb places. That has been just decimated because of what's going on right now. So I don't want you to be scared about it. I'm still buying. And we've been busier than ever. So one of the things that Neil and I talked about before we got on our interview yesterday, and I just a little behind the scenes, he said, how are things going? I said, actually really well. We've been at our office busier than ever, and we hired 3 additional people because of it, which is great. So that means the demand from people who get it. So what we've been noticing, at least on the calls when people book a call with us and wanting to invest in real estate right now and not the stock market, is they understand. A lot of them get it. They understand that real estate is a hedge against inflation. The tax benefits are second to none. It's a way to create cash flow consistently. And again, that hedge against inflation above where we're currently sitting, and we're going to see with the government printing money like crazy, it's going to be bad. So a stable asset right now that they can also do massive tax benefits and write-offs by accelerating their depreciation under the CARES Act, which I'll get to here in a second, some of the things that the government rolled out over the past few weeks that are great for us as real estate investors. So Neil and I were talking, and I said, how are you doing? And he said, great. He said they did a live webinar the night before on a syndication deal that they were putting together on some smaller single families. He said we had more people than ever who wanted to invest. He said we sold out that project within 35 minutes, the fastest we've ever done. So now these are 2 anecdotes, okay? I'm telling you my company, how we're dealing with it right now. We have highly qualified people who want to get into real estate, who are buying properties, and who, because the tenants are already in the properties and they're cash flowing, they're then able to accelerate that depreciation on their taxes. So they basically can buy a property for free because their down payment, basically they get it back in a tax benefit by investing. So those investors who understand are on it. They're with it right now. It's the skittish, scared people who don't understand that real estate is a hedge against inflation and it has all of these other benefits. It's the people that read the mainstream media or listen to the mainstream media that don't understand. You're hearing about mortgage problems and all this stuff. That's the retail sector, folks. That's not what we do. That's not what we do, and that's a big difference when you watch like CNBC and Fox Business and all these other things. They're talking about that home buyer that was going to buy a place to live in for the first time. That's not what we're talking about here. The other thing that we're seeing is an amazing benefit right now from the CARES Act. So I want to go into some of the benefits that we're seeing from what the bill that President Trump signed on March 27th. Okay, so I don't know how many of you know this right now, but under the CARES Act, everyone can lend themselves up to $100,000 from their employer retirement plans right now. Did you know that? Normally it's up to $50,000. They've extended that. So this is great for real estate investors. So if you're sitting on a 401k plan right now or some other retirement vehicle that you're sitting on there, you can invest up to $100,000 out of that now. And what's great is you can take it, you can be your own bank. Now, I mentioned it here on the show before. This is one of the areas, one of the ways that I bought my first few rental properties was using my 401k. Not withdrawing from it, but borrowing from it. But guess what? Now, under the CARES Act, there's no penalty if you withdraw. This is amazing. The whole reason, one of the big reasons I wanted to leave my job was so I could have access to my massive 401k that I could then use to invest. Because while I was at my employer, I couldn't touch it. And many of you know that when you're at your employer, you're not able to touch that plan until you leave. And I wanted to be able to self-direct that into real estate. So now, under the CARES Act, let me tell you about this. You don't have to pay a penalty. And they can pay that tax. So the taxes that you'll pay, you can actually spread it out over 3 years, minimizing the burden. And so if you bought, for instance, one of our new townhomes that we just completed, you would basically eliminate entirely all of the tax liability by using cost segregation. So we would provide a cost segregation analysis in the property, and then that tax burden that you would have with the government afterwards would be eliminated because it'd be spread over 3 years and you'd be able to accelerate that depreciation. So there have been a bunch of great things that the federal government has done for real estate investors. And this is no surprise, right? President Trump, real estate investor, all his friends are real estate investors, almost every member of Congress is a real estate investor. So when you see these things roll out, and I always say you can choose to play on whatever field you want. You can sit there and feel sorry for yourself, and you can say, oh, that's just the rich. Yeah, that's what they do. Should not be a newsflash for anybody. The rich will get richer. This is what they do. So I always say, what tennis court do you want to play on? The tennis court that was built by the president and Congress exists now. It benefits the wealthy. It benefits entrepreneurs. It benefits the type of person that builds a business, okay? It benefits the type of person that invests in the economy, okay? Invests in real estate, builds homes, is a huge tax benefit. We have an incredible affordable demand right now for affordable housing. That tennis court is over here, okay? That's the way it is. Now, do you want to take it to the streets with signs and protest and tell vote for Bernie Sanders and tell the world this is not how it should be? Great. Then use the power of the vote and get out there and change things. So right now, that's the way this tennis court is. You can play on the other tennis court over here, which is sort of like the whining, dreaming, wishing tennis court, which is not the way that things are. We have a tax code. This is the way it's written. It benefits investors. It benefits business owners. You can choose now while you're at home. This is what I want to say. You're home right now under this quarantine. You have an unbelievable opportunity to start a business, to work on that side hustle, to become a real estate investor, a professional real estate investor. When you do that, you show that you're able to do that for 750 hours a year, you become a real estate professional in the eyes of the IRS. So if you've lost your job, you're sitting actually on an amazing opportunity, because you might have retirement funds sitting there. You no longer are employed in this calendar year by that old employer. You could become a real estate professional under the eyes of the IRS, therefore making active income instead of passive income. You completely alter your tax bracket right now by doing that. And then you can utilize your retirement funds to invest. So what if you're sitting there on $100,000 in a retirement account that's not doing anything for you, or it's tied to the stock market? Well, you know how I feel about the stock market. I don't invest in the stock market. I would be looking at ways that I could take that money and self-direct it into real estate. And if you're unemployed right now and you're thinking, how am I going to get cash flow? That's the way you do it. Take that $100,000 and buy 3 properties. I'll help you do it. And then create that $100,000, turn that into monthly thousands of dollars in cash flow, plus the tax benefits. So now you have cash flow coming in from tenants. You might not have a paycheck right now, but now you have a performing asset. You become a real estate professional in the eyes of the government, so you lower your tax bracket, and you become an active investor. And then the list goes on, folks. I've listed like just a few. Then you start talking to your accountant, and you start to realize, holy smokes, there's so many other things I could be doing here. I could be making so much more money, working on your side hustle, setting up your LLC in your business so your business expenses flow through your LLC. I mean, this is the way that we can invest during a recession. Okay, I want you to change your brain, change the way you think about the world, and start to really take action and become a real estate investor, because I believe it's the number one way to build wealth. And the government, once again, with their stimulus plan, shows us that they value us. They value investors who run businesses. It's a fact. So again, what tennis court are you going to play on? The fake one or the real one that it currently exists because of Washington? You might hate it. You might think it leaves people out. Yes, it does. And we can change that by building houses and helping people. That's how we can change. So those are my thoughts. I'd love to open it up now for question and answer. We got a couple thousand people here on our different streams here. So I want to say hi, everyone.